So let me ask you a question. If you can't read the score, how do you know, how can you tell from winners from the losers? Winners from the? Losers. Let me ask you, what kind of, when you see this scoreboard, what kind of game is this? Football. What is it? Football. Football, okay. Now, for how many of you don't understand football? Okay, because I don't understand football. And you look at this, home, visitor, down, ball on, to go. What the fuck does that mean? You're like, who's winning here? What's going on? Because we don't understand the language of the game, yes? Okay, let's show me another one. What kind of game is this?
Basketball.
Basketball, yes. Okay, how many of you don't understand basketball? Okay, you look at, well, okay, this is Vikings, Wildcats, shot clock, period, player fouls. What the fuck is TOL? Like, what is going on here? Same thing. If you don't understand the rules, you can't read the scoreboard, how could you tell? How could you tell? And that's the thing. We've never been taught how to read the numbers. How to read the numbers. So accounting is not the scoreboard. Accounting is the report card. Accounting is what? The report card. When you go to your banker, that's from Rich Dad Poor Dad, is not going to ask you about, well, you know, what kind of grade did you get in school? You know, what's your score? Did you get all A's in business? So I can make you this loan? What are they asking for? What is it? Yeah, your financial statements. They look for your financial statements. Your financial statement is an indicator how well you actually understand money, how well you manage money, and how well you would more likely to pay back the loan he's going to give you. You could be, oh, wow, but I'm a very nice guy. Don't show me your financial statements. Well, I don't care how nice you are. You ain't getting a loan, sir. Right? You could be not so nice, but looking at a financial statement, I'll give you a loan. Banks is how they work. They loan you money when you don't need it. They loan you money when you don't need it. It's funny because when I had no money, I tried to get a line of credit and they just would not give it to me. Little bit line of credit, they would not give it to me. Now they're fucking calling me, oh, Dan, you need some money? I said, I don't need the money. No, you need some money? Line of credit, credit card? What do you need? Mortgage? Tell me, please. I'll loan you some. I don't need the money. I'll call you back next week. Maybe you need some money then. What about your partners? You know anyone that needs money? Because how do banks make money? Yeah, they make money by loaning money out. So they have a quota that they didn't meet. They need to get the money out. And most likely, if you understand how banking works, they prefer to loan a whole bunch of money to one person. Believe it or not, if you understand financial and you actually accumulate a certain amount of wealth, it's actually easier to borrow a whole big chunk of money than like a little bit of money. Yeah, they would, yes, right? Tammy knows. They don't want to loan, oh fuck, it's only 10 grand. Come on, like, yeah, they want $1 million, let's talk. Because think, 10 grand a pop, it means how many applications they have to process to get to $1 million. 1 million, good track record, got assets, knows financials, great. $1 million, here you go. Awesome, right? Let me go play golf. That's how bankers think. That's how bankers think. So we talk about the cockpit as a pilot of your business. We need to learn to read the dials. Yes? There are three. How many? Three dials that you have to understand. You have to understand. So the first one is what I call a balance sheet. What is it called? A balance sheet. Now with a balance sheet, which you have a balance sheet, not BS, balance sheet, okay? So, make it very simple. On balance sheet, you have, now forget, I don't want to get so complex with these accounting terms, okay? So I'm going to use my Dan Lok terms here, okay? On the balance sheet, you have what I call things and stuff. Okay? How many can understand things and stuff? Okay, things and stuff. Things and stuff. Now, give me an example. What are some of the in accounting terms, it's called assets, but what are some of the things and stuff you have in your business? Car, okay. So vehicle, yes. Technology, good. Office, yes. Is cash part of it? Yes, cash. Okay. Property, yes. If you have a property that you occupy, your retail location, property, yes. Receivable. Now, also, question is goodwill some of the things and stuff? Yes. Yes, your brand, right? Goodwill, yes. Okay, accounts receivable. So, you have some things and stuff here. And then you also have, so in terms of things and stuff, you either own your things and stuff or you owe things and stuff. Okay, so repeat after me. Either own things and stuff or you owe things and stuff. Now, when you own things and stuff, we call that equity, right? Equity. When you owe things and stuff, we call that liabilities. Okay, so owning and owing. Things and stuff. How many follow what I'm saying so far? So good, yeah? So far, so good? Yep. Things and stuff. Balance sheet. Now, the balance sheet is nothing more than a snapshot. A what? Snapshot. So everybody does this with. Just engage to do that. Just take, yeah, a snapshot. So it always has a specific date. It's a snapshot of what happens in any given time. So it has a snapshot in time. It always has a single specific date. Always has a single specific date. A balance sheet shows what a company owns and what it owes. Very simple. It's things and stuff, right? Things and stuff. And how much money is tied up in terms of cash or receivable, inventory, or equipment. Balance sheet. Now, first question for you is this. How many of you get a balance sheet once a year? Okay, once a year. How many get it once every 6 months? Okay, how many get it every quarter? Okay, every month? Okay, balance sheet. A snapshot, what is happening. Then you have what I call an income statement. A what? Income statement. So with income statement, now think in terms of income statement. With an income statement is a theory. It's a what? It's a theory. Now, for those of you who understand accounting, bear with me here. You're like, no, what do you mean, Dan? No, that's not theory. An income statement is an income statement. It's a theory, and I'll explain why in a minute. Now, there are different, in income statement you have, of course, sales, right? Revenue, so sales. Now, if you're selling a product, when you have sales, you also have what they call cost of goods sold, right? What does that mean? Yeah, how much it costs to make those things, right? How much it costs to make those things. So when you sell, your sales minus cost of goods is what? Becomes your, it's called your gross profit. Okay, it's called your what? Gross profit. Okay, your gross profit. And then, now when you're making sales, do you also have some expenses? Yes or no? Yes. Some expenses. What are some of the expenses? Yeah, the answer. Gas, yeah. Advertising, yes. Rent, good. Commissions, payout, yeah, you see that, some of that, right? Utility, yes, utility, keep the lights on, right? Equipment, expense, yeah, office equipment, yes. If you're leasing equipment, yeah. Taxes. Now, so look at the, so what happens is most business owners, they get the income statement. What's the number they look at? How many of you look at that number immediately, right? What is my net income? In this case, it says $18,000. And you look at the net income. If the net income is higher than last year, you go have a drink. Right? If the net income is lower than last year, you go have 2 drinks. Right? 2 drinks. Now you wonder why a lot of entrepreneurs are alcoholic. 2 drinks. So you look at the numbers, you look at, okay, that's what's going on. But here's the problem with that. It is a theory. It is a theory. It's not actually how much money you're making. Because you can't go to the bank and deposit profit. You don't go to the bank and deposit profit. You go to the bank and deposit what? Cash. Cash. So that number could be very misleading. Income statements can be very helpful, but they can also be very dangerous. They can be what? Dangerous. The number at the bottom of an income statement is not cash and cannot be spent. Cannot be spent. So don't think in terms of, oh yeah, okay, the number looks okay, then I'm okay. No. No. The number at the bottom of an income statement is not cash and cannot be spent. Very key. Just for now, remember that. Got it? Yes. Okay. Stay with me. You awake? Yes. Okay. Stay with me here. Now, let me ask you a question. Is it possible for a business to have $50,000 in profit and have no cash? Yes or no? Yes. Why? Give me an example. They got? Okay, so it shows a profit, but maybe they have not collected the money yet. Okay, it's possible. What else? What other scenarios? How is it possible? $50,000 in profit and no cash? Yeah, they spend money. Maybe they buy a new vehicle. So it shows a profit, but they spend the cash. Yes, that's awesome. Inventory, yes. So it could be that, yes, we have $50,000 in profit, but then we invest a lot of that cash buying the next quarter inventory. Yes?
But is all that defined up as like tied up cash?
Accounts, so some of that, so Errol's case is called accounts payable, right? Accounts payable and all accounts receivable. So, or now, let me ask you a question. Could you have $50,000 of losses and have $100,000 in cash? How is that possible, though? Okay, so yeah, you have $50,000 in losses, you have some accounts payable, you owe some people some money, you haven't paid that yet. So you still have that cash, right? Okay, how many have done that before? So bad. Okay, but what other scenarios? How could you have, yes?
You book your expenses ahead of time, so you're already paying expenses for the next month on your income statement, which is in theory, but it's not your actual cash.
It's not actual cash. Very good, Ryan, yes. Yeah, you could also be, you have $50,000 in losses, but maybe that you're running out of some money that you borrow from a friend, 100 grand cash and put in the business. So it looks like you have losses, but you actually have some cash in the bank account. Does that make sense? So can you see how if you just look at the income statement, it could be a little bit dangerous. If you try to make your business decision based on, okay, I think that's what's going on, but it may not be actually what's going on. Okay, it's like you go to your doctor, and how many of you regularly do body checkup and stuff like that? You should do that once a year, right? You go do that and look at you go see a doctor, and the doctor looks at these numbers, cholesterol, this and that, and you go through all that. Nah, I have no idea what these numbers mean, but I think you're pretty healthy, right? And then you look at the numbers like I don't know the fucking idea what does this mean, doctor? I don't know. So as an entrepreneur, we need to be able to interpret it. What's that the word? Interpret. What these numbers mean. We need to convert those numbers into the story. What are the numbers telling us? What is the story behind the numbers? I'm not trying to turn you into a bookkeeper or an accountant. No. I'm trying to get you to understand some of the fundamentals, so then when you look at some of these numbers, oh yeah, this is what I need to work on. That's what my business needs. That's a lever I need to pull in within my business versus I have no idea what this means, but let's just go out there and grow and generate more revenue. Does that make sense? Yeah. Cool. So running a business out of a checkbook or tax returns or looking only at net profit are very poor ways to run a business or determine the financial health of the business. It's very, very misleading. You look at the net income and say, oh, I think I'm doing well. I think it's going up every year. It's very, very misleading. A lot of entrepreneurs, especially solo entrepreneurs, they look at the tax returns. Imagine you get your tax return, this is how much taxes you owe, how much you pay. What does that tell you about your business? Nothing. It just tells you how much tax you got to pay. Does that mean my margin is going down? Is it going up? Am I bringing more clients? Am I spending too much money servicing those clients? Do I need to hire more people? Am I paying too much for my employees? What the fuck is, I don't know. But you look at a tax return, I guess I'm making more money, I'm making less money, I don't know. But that's how most entrepreneurs operate. Do you see how dangerous that is? Yeah, it's very, very dangerous. Very dangerous. So, and then we have the third dial, which is the most important one, is what I call the cash flow statement. What does that mean? Cash flow statement. Now, a cash flow statement is not a fact. It's not a theory, it is a fact. It's not theory, it's a fact. It is a fact. From the cash flow statement. Cash flow statement. And you notice actually most entrepreneurs, when they file their tax return, they get the balance sheet, they get the income statement. Very often they don't have the cash flow statement. They just look at those two. Then this is actually a fact. This is actually how much money you have. Okay? You look at that now, but here's the thing. Cash, so let me ask you a question. So for cash flow, what are we measuring here?
Money coming due.
No. For cash flow, what are we measuring? Cash, right? Cash flow. So cash is the real money. It's money that hits your bank account. Cash is what you use to pay your bills and employees and rent. It's actually, listen to this. Cash is what you use to pay your bills and employees and rent. Cash is what you use to repay lenders and provide shareholders you with returns. You go to the bank and you deposit cash. Cash. In fact, say it with me. Give me some cash. Give me some cash. Yes, give me some cash. Everybody, give me some cash. Give me some cash. Yes, give me some cash. And not all cash is created equal. Not all cash is created equal. There are actually different types of cash. What do you mean, Dan? There are actually different types of cash. There are 3 types of cash. How many? 3 types of cash. You have first what I call operating cash or operating cash flow. It's called OCF. It's called what? OCF. Write this down. This is cash generated or used by the operations of the business. Generated or used by the operations of the business. Operating cash. Operating cash. And then you have what I call investing cash or investing cash flow. Write this down. ICF. What's it called? ICF. Investing cash flow. This is cash generated or used in buying or selling fixed assets. Now, what are fixed assets? We're talking property, plants, and equipment, or PPE. A lot of people like to refer to property, plants, or equipment. I.e., you have a piece of property, a retail location, you sold that piece of property, you sold that piece of land, you sold that factory, and you got money. That would be investing cash. Does that make sense? Yes. Okay, fixed assets, investing cash flow. And then you have what I call financing cash flow. This is cash generated used from lenders or investors. Let's say you put in some money or your family put in some money into the business, put in some cash in the business. That's financing cash. Okay? Financing cash. Or you borrow money from the bank. That's financing cash. Financing cash flow. FCF. What's it called? FCF. So financing cash flow, FCF. So we've talked about 3 dials, right? What's the first one? What's the first one? Balance sheet. What's the second one? What's the third one? How many types of cash are there?
3.
And then what's the first one? What's the second one? What's the third one? Okay, take 2 minutes. How long? Discuss among the table what you've learned so far. Okay, 2 minutes, go.
10 times your finances, 10 times your business, 10 times your marketing, 10 times your life. Hit the subscribe button now.